Hi, everybody. All right. Good evening, ladies and gentlemen. Good evening and welcome. Welcome to another edition of DayTradeSPY.com's Week-In Review. Let's get the show started here. My name is Hugh, and co-presenter is Aaron, but he is off tonight. And we gave him the night off. He did so much work last week. Did a couple of presentations at the Florida Orlando Money Show and tried to give him a night off. So that's fine. Not a problem. By the way, he's going to be doing Tuesday nights weekend reviews. So make sure you check in with that for those people who are part of the inner circle. You won't want to miss that. So anyway, just see a lot of people still rolling in. And while we are waiting, let me just get the thing started here. I want to make sure that we're all good to go here. Right here. Okay, hit the record button. I think this is the button right here. I got it. Okay. Once again, welcome everybody to the DayTradeSPY.com's Week-In Review. Again, my name is Hugh, and Aaron does have the night off here tonight, so that's fine. And it is Sunday, November the 5th, 2023. Good to have you all here. So a little housekeeping here before we get started. I need to get my screens in order here. See where we are. So today is, of course, there it is, November the 5th, and heading into the fall. I'm looking a little grubby here. Didn't get too dressed up tonight because my wife and I just went for a nice long walk, nice little hike in the West New York area. Of course, you have the beautiful Niagara Gorge, Niagara Falls. I love the fall foliage. You can tell that the fall is probably one of my favorite times of the year, and love it out here. Actually, people sometimes ask me, we're down in Florida there for a couple of weeks, and people say, well, why don't you move down this way and stuff like this. You know what? I actually like the seasons. I do enjoy the fall and the spring and of course the winters, although they could be a little rough, but I kind of like it here. So anyway, took a nice beautiful walk in the fall. In fact, we got some pictures. I didn't get a chance to actually upload the pictures that we took, but I just grabbed a couple similar pictures to what we had here today. So this is one here. Oh, there's the other one. Okay, let's go back to this one here. Come on, there it is right there. This is what it looks like in the gorge right now, where beautiful fall foliage, the fiery colors of the trees turning color, and it's actually very beautiful this time of year. And this is a drive through the parkway along the river, and of course the trees, they look like they're actually on fire. They're actually gorgeous, and it's really worth the drive. So if you are anywhere, I guess in the area where you get this beautiful fall weather, it's beautiful to just go out for a drive. Anyway, I know that's not why you're here, but I thought I'd throw that in here. So I'm going to give you the disclaimer here. Keeps the lawyers happy. And I want to mention to you too that it is an interactive session. Please use the questions box for any questions or comments you might have. And that's how we're here. Okay. So while we're giving you this disclaimer here, I just want to mention that a couple of things that, first of all, sometimes I get very passionate about what I'm talking about. And sometimes I tend to speak a little bit too fast. If you find that is the case, please tell me to, slow down a little bit and, describe things in different words that if you're not understanding what I'm talking about here. We are trying to keep it non-technical, right? So that everybody can understand. But I will say this in the questions box, please use that freely, because I am the only one that sees that. So go ahead and say whatever you want. All right, to start with. Also, too, if you are new to trading, new to options, new to spying, you don't really understand what we're talking about, please let me know that. And then we'll stay after this session here, this weekend review session, and I'll go over what options are later on as well. Just kind of give you a very brief overview of why options, why SPY, why now, why day trade SPY. All right, guess you probably had a good chance at reading this disclaimer that basically says you are alone and responsible for all your own trading. Past performance does not guarantee future results. And any decisions concerning your trade are solely your own to meet your personal objectives and risk tolerances. Very important to know that. So let's move on with that. Okay. All right. Bit of a background of myself. Oh my gosh, this thing's flipping through pretty fast here, isn't it? All right. Excuse me. So my background, I'm sure many of you know this article because we can't talk about this during the during these sessions. Come from corporate America background and handed off a lot of my my income to my financial advisor to invest in my retirement. Didn't quite work out the way I thought. Essentially, called him up when I discovered that he'd blown up about half my account, spending a lot of money into this thing. And said to him, Mike, I want you to just cut me a check for whatever you have left. Obviously, I have to learn how to do this myself. And I thought, coming from an internal audit background, that I probably have a pretty good handle on the numbers and know a little bit about risk. So I'll probably do okay with it. Another thing that I realized, I'll never forget, coming back from his office that day was, number one, nobody cares or should care more about my money than me. And that goes for each and every one of you, right? And the other thing I realize is that now, with the power of the internet, we all have information at our fingertips just as much as anybody else. Yes, there may be some people with a news feed that is a few seconds faster than you and I, you and me, but it's nothing that's going to make a material difference in obtaining information. So we generally and we go over this every week in the Week in Review, right? We discuss this about how the news events had unfolded and where the market went. It's all makes total sense. Makes total sense. And that's what we're all here for. We're all talking about that. All right, let's move along here. My background. So I discovered how to do this, and I started making some pretty serious money on the market. People, friends, family, neighbors, associates started asking questions. Oh, Hugh, it's okay. This is pretty cool. I like your new car. I see you're taking lots of vacations. You're not working anymore. You get up, you seem to have a nice lifestyle. I said, yes, I do. I said, well, what are you doing? Did you win a lottery? Nope, no lottery. No lottery at all, none whatsoever. But instead, I am day trading options on SPY. That's what I'm doing. I'm trading stock options on SPY, the stock that follows the S&P 500. And they started saying, well, can you teach me how to do it? Can you show me what you're doing? Can you just put up on the internet as to what you're doing? So we drew up a rudimentary website, and I just laid out what I'm looking to trade every day. And a lot of people started taking notice. Excuse me while I take a drink of water here. And they started to coerce me into showing them and teaching them and excuse me, setting up the inner circle and trading room and all these other things. So excuse me, a lot of training came off that. And here we are now, 14 years later, we're still going strong, still doing this. And we had since been bought out by Eagle Financial, which is a subsidiary of Salem Media Group. And back to corporate America. Okay, back to corporate America, but it's fine. We love it. Anyway, that's my background. Been making money, pretty good on the market, and really enjoying it. Really enjoy teaching other people how to trade, how to day trade SPY options. So a little bit about my background, as I mentioned here, I learned the hard way. Okay, I'm going to tell you right now. Excuse me. I learned from the trenches. I took a lot of different courses, but I found that a lot of those other courses, they really weren't fulfilling my needs. I discovered that a lot of them were just there to upsell you and to sell you other things. And I remember being in some of these classes, and somebody in the back would put their hand up and say, well, what about covered calls? You're going to show us something about covered calls? And the guy at the front would say, yep, that's at a webinar or seminar rather that we're going to have in Tampa. Coming up next month. Of course, it's $6,000, but if you buy it now, it's only $3,000. So there it is. During the break, we parade to the back, line up at the back, and hand over our plastic to the lady in the back to give us our $3,000 or the course for $3,000. That next month we got to go down to Tampa. And anyway, it was a lot of there's a lot of stuff that was going on there, and a lot of these courses, you take them home and they just don't do what you think they're going to do, or you didn't understand or whatever. Most of my training comes from, like I say, deep in the woods, deep in the trenches. And I made a lot of money, and I also lost a lot of money. All right, lost a lot of money along the way, and most of the losses, that's where I really learned my stuff. Okay, I learned my stuff in the losses, and I would always log my trades and go back and see, well, what did I was very analytical. I go back and see, well, how was it that yesterday this trade was good and today it's no good? Just what happened here? What happened? And I remember the day somebody said to me, well, what do you do with the Greeks? Do you follow the Greeks? I said, no, I don't follow the Greeks. And they said, well, maybe you should. Because a lot of your answers are right in there with the Greeks, right? And I started studying the Greeks. And I studied enough to, let's put it this way, I studied enough to be able to stay out of trouble. And when I started making some serious money, that's when people started to look my way and say, hey, you know, what are you doing? Anyway, I've been teaching people since 2010, so 14th year right now. And I'm looking for these high probability breakout trades, getting small daily gains. Now, my associate, Aaron, who was in the trading room every morning, he mastered deep dive technical analysis back in his teens. Believe it or not, when his friends were, were playing sports and chasing girls and climbing trees and, playing board games or whatever they were doing, right? He was looking at technical analysis. He was studying charts. In fact, his latest gig was a technical analyst for a $150 million commodity fund. By the way, one of the most successful funds out there. We were able to scoop this guy. It was a coup. It was something that I would, let's put it this way, I'm very fortunate, and I know a lot of people are too, to have Aaron on our side. He identifies excellent longer-term high probability trades. And so he has his set of indicators, which are completely different from mine. And I have my set of indicators. I'm highly successful. Aaron is highly successful. And when the two of us agree on a position or an execution, a trade setup, probably a good idea to take the trade because you're probably going to make money. Okay. All right. And I think it's pretty important. And that's why we say when our indicators unite, our trades ignite. Excuse me. So like I say, he's got the night off, but we'll talk to him tomorrow morning. He'll be on with the trading room, and he's also going to be doing the Tuesday night interactive weekly meetup that we have with our inner circle members. So I have a question for you here. This here is just an opinion here, trying to get a poll. How many of you are looking to make $100 to $200 a day trading options? How many 200 to 500? I want to just punch up here in the questions box, folks, trying to get an idea as to what your goals are here tonight and what you are aiming to get. Okay, and just punch up in the questions box. Okay, I want to make this sort of an interactive session, and if I can just again get a feel for where you are with your trading. And I see a lot of comments are already popping in. A lot of B's and C's. A lot of B's. There's some D's there. Len, good to have you on. Thank you so much. And starting with $100 and scale up. I like this. I like the D's. I like the D's because they are higher ambition goals, right? Those are the ones that I really like, because this is where a lot of money in this business, a lot of money. And by the way, this is not pie in the sky to make $1,000 a day trading options. You got a lot of people making that and much more. All right, love it. A to start. Good. D for Dinesh. Met this guy at the Florida Money Show. Good to have you on. All right, good stuff. All right, we're gonna have a little fireside chat. One of the things we're going to be discussing here are $2,000 to $10,000 challenge. Going to give you an update on that. Also going to talk a little bit about a trading career path. I've been getting a lot of questions over the last few days about that, especially at the Money Show. People come up to me and say, well, here, where do I start? What should I do? I don't know anything about options, or I do know something about options, or why SPY? Why this? Why? I said to him, so I started talking to him. I said, okay, listen, this Sunday night, we're going to give you a bit of a career path as to how to go about doing this, okay? I want to be clear on this. Also, we're going to have a Q&A session, so bring any questions you may have about your trading, or I'm not going to address, by the way, any particular trades you may be in right now, but these are going to be very sort of general questions about day trading options and in our programs. Okay, that's going to be what it's all about. All right, so right now let's take a look at the weekend review. Excuse me. And this is what happened this last week. Just going to quickly go over this. And of course, the important thing is where we are going, not so much where we have been. But I want to see if you're going to pick up any patterns here. I've been doing this week after week after week, and I'm trying to show you that there's some real patterns and a relationship between news, which we are going to call fundamental analysis, and where the markets are going to go. You see, we're just not that smart to know where the markets are going to go a year from now or 3 months or even a week from now, but we're pretty good at determining where it's going to go today and tomorrow. And I think that's kind of important. So if you have a good handle on the news and the technicals, you usually do quite well with the moment trading, the day-to-day trading. So last Monday we had a no news day. All right, not much action on the markets. Technical trading kept SPY range bound, but we had earnings. So we're in the middle of earnings. We're on the downside of earnings right now. We're pushing it to the north side. So the market pushed back up here to just over 415. That's a strong resistance zone, but we did break it on Monday. On Tuesday, we had lower than expected Chicago PMI report and a consumer confidence that pushed SPY up a couple points. So when there's this lower than expected Chicago PMI report, that's telling us that inflation is not as much a problem as it might be, and therefore there's a lesser chance that the Feds are going to increase interest rates. All right, and of course they're talking about one more increase this year, and it looks like it was not in November, or of course at that time we didn't know it was going to be. I don't believe in. Or I think maybe we did. I'm not really sure when I think the interest rates came out November the 1st or 2nd, somewhere in there. But if it wasn't going to be November, they're kind of concerned about December's interest rates. But the PMI report was anti-inflationary. I'm going to call it anti-inflationary, which was a good thing for the stock market. The stock market does not like inflation because it fears interest rate hikes, right? Fears interest rate hikes. On Wednesday, we got a non-farm employment change, manufacturing PMI reports, and a JOLTS job openings report. That created volatility in the morning. But the Fed funds rate provided for a 4-point move in the afternoon, when, of course, they kept rates the same. And the comments the Feds made, Fed Chair Powell, about sitting back and sort of waiting to see what the numbers are going to come out, like whether they determine whether to move up in interest rates in December or hold the line. So it was a sort of a non-threatening kind of report. On Thursday, we had a continuation of the Fed's comments about possibly holding interest rates into December, which was really nice. Market really, really liked that. We moved up here from about 420, 422 up to a nice 430. By the way, that was predicted in Aaron's longer-term trends. In fact, frankly, I was kind of scratching my head and wondering and hoping, of course, he's going to be all right. And sure enough, he went right into that. Come Friday, we had anti-inflationary employment numbers, and PMI pushed SPY even higher. We ran right up to, I believe, right to 430, 435, 436, up into that zone in there. And that's what we had this last week. Basically, what we had here is some numbers into S&P, NASDAQ, and Dow. Of course, we're only looking at the S&P, which gives us an idea here how the S&P 500 is 13.5% up year to date. NASDAQ almost 29%, and the Dow is up almost 3% year to date. Stocks rallied, excuse me, as economic data and Fed commentary spurred the decline in interest rates. That's good for the stock market. Feds held the rates, but they struck a more balanced tone around its outlook for upcoming rate decisions coming up in December, which was actually very favorable for the stock market this last week. Also, latest unemployment numbers. Employment numbers support optimism that the Feds could move to the sidelines. Just let the latest increases work their way out, because the issue was labor. Labor was still very strong, but now they see that it's actually coming down a little bit and subsiding. So it's going against that whole inflation model, and it looks like things are pushing pretty good. We may still see some bounce as we head into the end of the year, but markets may find some momentum as we close out 2023. All right. And usually after a bad third quarter, which is what we had, usually see a good fourth quarter. And I think that's kind of what they're banking on. I think they're banking on that. So it's going to be pretty good. I suspect that the fourth quarter is going to be pretty good. Looking at the seasonal charts, take a look at the seasonality of this thing. Let's expand this out here and drill down into what's going on. For those who are not familiar, this is a seasonal chart on the SPY. SPY, of course, is the stock that follows the S&P 500. Okay. So now that blue line at the top, that's where SPY is now. And the red line at the bottom is the composite of the last 5 years closing balance on the daily chart. So let's take a look here. Looking at last week, we dropped a couple of points, but looking at the week coming up, we actually gained about 11 points from a seasonal standpoint. Now, a lot of that could have been, an earnings trade, earnings positions or whatever, but it's kind of nice to see that from a seasonal standpoint, we did gain about 11 points in the week ahead. And I'm thinking here, that's probably the way I'm going to be trading this week. Forward-looking Monday, it's a no news day, mostly technical trading, possibly range-bound trading, probably lower volatility, right? Tuesday, watch for some hawkishness from Fed member Waller. Waller is going to be speaking. Wednesday, we got Fed Chair Powell speaking. Fed Chair Powell, let's see what he's doing. I think he's doing, let me just pull that up. I should have had this up already. I don't know if he's going to be speaking much on interest rates as much as, let me just pull this up here. Fed Chair Powell speaks, opening remarks at the Division of Research and Statistics Centennial Conference in Washington, D.C. Not sure what he's going to say, but you can be sure that when Powell speaks, the market listens, and that is going to probably have some volatility on Wednesday. All right. Don't forget too, earnings are still rolling in. And if they're anything like they have been in the last couple of weeks, we could probably see a little bit of an uptick in the market in that regard. Thursday, unemployment claims. Fed Chair Powell speaks again due to participate in a panel discussion titled Monetary Challenges in a Global Economy. He's going to be at the Jacques Pollock Annual Research Conference in Washington. Monetary challenges in a global economy. That will probably have more of an impact than on the Wednesday's opening remarks speech. So do watch for some volatile increase in Thursday's trading. And then on Friday, we've got a consumer sentiment and an inflation expectations report coming out. Again, I'm thinking here that November and December have traditionally been positive for equities. That will probably continue this year as well. All right, probably continue on this year as well. All right, let me ask another poll question here. Have you taken any courses in the past? Just want to get an idea as to what sort of what's going on? Why is it asking me if I want to save? We had a little issue here. Hold on a second. I'm going to pause the share for a second. For some reason, my Microsoft just cut out on me here. And let me just pull this back up. Not really sure why, but we'll pop this back in. Here we go. Slideshow from here. All right. There we go. All right. So question for you. All right. Question for you here. Have you taken any courses in the past? And if you had, what were your results like? If you don't mind putting this, your answers in the questions box, appreciate that. Again, just to get an idea as to where to go with things here tonight, and I'm hoping that you say yes, I had great results and whatever. But I guess my next question to that would be, well, what are you doing here? But give me an idea on this. So while I'm going to wait for some of the answers to come in on that, let me take a look here. Okay. A lot of mixed answers here, mostly A and B, mostly bad. Okay, some mixed. Okay, no courses. Yes, good results. Good to see that. Some see good results. Okay. So there's some are better than others, no question about it. Mary says, D, but have trusted others and lost using options. Poor results, bad results, mixed results, lots of self-study. Interesting comments from a lot of you. All right, mostly bad. Okay, good mix. Not too many C's, folks. Not too many C's. All right, maybe we can change that for you. I'm hoping, and that's what this is about. Not just to show you where the market's going to go, where it's been, whatever. But we've got some ideas here that can probably help your trading. At least that's the idea here. So the market actually provides a lot of opportunities. We teach you how to spot them, how to buy them, how to sell them. Now I want to tell you something about that. So when I started trading here, of course, I looked at the market as my adversary, right? It's me against the market, and who's going to beat whom, the funny thing is, I would make money, I would lose money, and I'd go back and review, and I look at the day's events. I say, look at all the opportunities the market gave us to make some very serious money. As a matter of fact, if you kept trading in and out, it was very conceivable that you could actually make, you could double your money every day on the market just by going in and out, if you know what to do. Now, that's not what I was doing, but I saw the many opportunities. Then when I discovered that if I look at the market as my friend instead of my adversary and kind of work with it, and I use the analogy that it's like a dancing partner, you get this symbiotic relationship, like a hand and a glove, right? Relationship with the market. And it's like a dancing partner, you take 2 steps forward, the market takes 2 steps back, it takes 4 steps forward, you take 4 steps back. But the market goes up and down. And when you look at these charts, you don't see lines in a straight line. You see them zigzagging. It goes up, it goes down, it goes down, it goes up. And if you can just follow along on some of these moves, and then when, let's say you take 4 steps or 3 steps forward and you say, thank you, market, I'm going to sit down now. I'll wait for the next opportunity. I'll take my profits now. It's actually pretty cool. And when I just discovered that, instantly my fortune changed, because then I realized that it's okay for the market to go down. I don't need a stop loss to take me out all the time, right? And I don't know, some of you might use stop losses. How's that working out for you? Because when I use stop losses, I used to use them, I found I got stopped out a lot more than I cared to remember. I did not like it. I lost a lot of money on stops. Now, people ask me all the time, well, what do you use for money management if you don't use stops? How dare you not use stops, I said, well, we do have money management techniques that we invoke. Obviously, we're not here to lose all our money or anything like that, but stops for SPY options generally is just not a good, at least the way we trade, is not a good strategy. So many times the market will go down 10, 20, 30%, 40%, and then it reverses, goes back up. How many times, let me ask you guys this. When I say guys, I mean guys and gals. How many times have you watched a stock, it goes against you, right? It goes against you, and then, your stop takes you out, but you're still watching it as if it's still your option, right? As if you're still in the trade. And then, a few minutes later, it reverses. And then 10, 15 minutes later, you're saying to yourself, oh my gosh, should I just stayed with this? Another 10, 15, 20 minutes later, I would have been making money again. Right? I would have been making money again. So from that standpoint, now the way we trade, I want to qualify that and say the way we trade, because not all strategies, is good with not using a stop. The way we trade, there are strategies that you probably do need a stop. And Brian Z here is making a comment here that he uses mental stops because he likes to trade same day expiration. Okay, with the same day, I am with you. I am with you. If you're on a same day expiration, you don't have the luxury of time. And from that standpoint, perhaps a stop is really well worth it, because, that market goes against you, you're toast, right? So a stop there would obviously work. But we like to trade. So one of the things I like to do is, when I teach this, I like to teach this more for like beginners. And as you get more experience, then you can get into more exciting trading, same day expirations, go for more money. So, but to start with, for new people online, I'd like to say, hey, let's go a little by a little time, a little more safety if there's such a thing in options with SPY, and just kind of get your feet wet, slowly before you jump in, right? So we like to buy some time, and anyway, stops for that approach, it does not work very well. All right. Boy, I'm getting a lot of comments on here many times. Yes, that's okay. Wow. They're all chiming in here. Okay, good stuff. Okay. All right, let's move on, folks. Let's move on. One of the things I promised you, an update on the 2 to 10K challenge. For those who are new, don't know what we're talking about, started last spring. In April, we thought we'll take $2,000, turn it into $10,000 in 3 months. And we actually came in ahead of the game by, I don't know, a couple of weeks or something, whatever it was, a week or two. And by popular demand, we brought out version 2. Yes, 2 to 10K challenge, version 2. And here's a spreadsheet. So we started here September the 25th. The idea here is that by December the 25th, we're going to have $2,000 turned into $10,000. We're at the $49.50 level. We are currently $755 ahead of ourselves, which puts us about a week ahead of ourselves. So in other words, if we don't trade for the next week, we'll still be ahead of ourselves as far as our budget is concerned to hit our target. Okay. The last couple of days I did not trade simply because I was traveling. And I show this in the trading room. So this is something that I do in the trading room. Now Aaron led the trading room, but he was involved in his trades. He did not do the challenge, but so I was driving back from Florida at the time, and anyway, I did not trade. So there's zeros. We're still $755 ahead of ourselves, and our targeted budget right now. Our budget it should be about $41.95. We're actually at $49.50. Again, we're ahead of ourselves. What is this? How many trades here? 30 trades. One loser right here. I lost $180 back on October the 26th. And that was only because I was in a trade and I had a busy day set up. I did not want to monitor, watch this, what have you. At the time, I ended up just taking a bit of a loss, $180, just to get it off my plate. I want to go and enjoy the rest of the day. And I said, you know what, I'll take the hit. Not a big deal. I was very well ahead of the game at that time. And I knew I was going to make it up later on. I didn't want to be in the trade, possibly even over I don't know. As I understand it, that trade probably would have filled if I just stayed with it a couple of days, but I didn't want to tie up my capital. So sometimes if I'll take a small hit like that, that's great. A couple of days in there, I was not in a trade because for whatever reason, again, travel probably on the 19th and 20th, we're traveling down. A couple of the days in there, probably not feeling well, or the market just wasn't ready for me or whatever. But even with some no trade days, we're still well ahead of it. And so we're doing well. All right. According to this model, we should be ahead of ourselves about 6 days right now. And here's a chart of that 2 to 10K challenge. And apparently the way we're heading, I think we're going to be substantially ahead of ourselves. All right, with this by the time we reach our goal. That green line is the actual where we are right now. The red line is the budgeted target as to where we're supposed to be. And you can see how the green line is widening away from the red line. If we continue on with this, we'll probably hit our budgeted target long before December 25th. Would that not make a wonderful Christmas present, folks? If you came in under budget as far as time is concerned. All right, so I'm just looking at some of the questions here. This is our fireside chat. This is where we have this fire going. Let's get the fire going. There we go. We have to light the fire. Click of a button, we light the fire. All right, let's get into some of the comments that you have here up on the board. All right, question from Steve. Steve P, if you are trading with a cash account, How much do you need in your account to seek a $500 a day goal? Well, it depends on how much you have in your cash account, how much you want to trade, whatnot. So let me explain this. Now, I very strongly advocate a cash account. Now, when you set up with your broker, they would like to set you up with a margin account because brokers generally make their money by lending you money to buy stock. So let's just pretend you have $50,000 in your trading account and you buy $20,000 worth of stock. You might think that on a margin account that your 50,000 balance would drop to 30,000, right? You just bought 20,000 worth of stock. Not the case. Your equity drops from 50 to 40. Why? The broker took 10 from your account and lent you 10 for the other, for the rest of the 20,000, because they charge you interest. That's where brokers really make their money. I think the commission's almost incidental. It's secondary income to them. So brokers like it, and they try to get you to set up a margin account. Sometimes you might have to twist their arm a little bit and say, no, I really just want a cash account. And then if they feel that you're going to leave them for another broker that will set you up with a cash account, then they'll say, okay, fine, I'll give you a cash account. I know with Tasty Trade, you can get a cash account, no problem. They don't bother you with that. Maybe Thinkorswim, I haven't sort of talked to them a long time about that, but go for a cash account, because with a cash account, you can only trade with what you have in your account. Okay, so you can only lose what's in your account. And along the same vein on that, do not put any more in your trading account that you can afford to lose. Don't put all of your retirement savings into your trading account. You can actually very easily make a mistake and blow it all up. Okay. And there's no reset button in a trading account. It's not like you can call your broker and say that last trade I made, I was just kidding about that. Can you reverse that loss and give me my money back? And they'll just laugh at you, right? So you want to really be careful about all of this stuff. So let's say you had $10,000 in your cash account. Okay, $10,000 in your cash account. You can trade as much as you want up to that $10,000. Now, let's say you traded $10,000 and you made $1,000. Okay, you made $1,000 that day. You can only still trade up to the $10,000 until your $1,000 profit settles, right? Which is the next day. Now, depending on your broker, you might want to contact them and just say, how long does it take to settle? It used to be 3 days or something, but now with electronic settles and stuff, it's usually the next day. So then when your trades settle, which is the next day, then you can trade $11,000 if you want to trade $11,000. So that's the way the cash account works. Question, how much do you need to make $500 a day? I mean, if you're in and out, I mean, I could trade with a cash account. I mean, let's say I had 10, I don't know how much you have in there, Steve. If you had, say, $10,000, it should not be that difficult to make $500. That's what, 5% in a cash account. That should be fairly easy to do. If you've got a $5,000 account, if you make 10% on that, it can be done. It's not that big of a deal. I've done that many times. But I would wrap it up first. Start with $100, $200. Get a spreadsheet going, kind of like our 2 to 10,000 account. Put in a spreadsheet, have goals, daily goals, and learn to be happy when you achieve your goals. Because if you follow your plan, you will achieve your goals. You should achieve your goals, right? So I'm not sure how much you would have in your cash account, but I could see, I mean, for a $500 daily goal, I would probably want to make sure I had probably somewhere around $10,000, just to kind of keep it like sort of nice little safe sort of a thing in there. So, all right, Brian, I'm rethinking same day expiration from your trades in the trading room. So when I trade, all right, in the trading room, if it's Monday and Tuesday, we usually have that same week Friday expiration. And if it's Wednesday, Thursday, and Friday, we will have the following Friday's expiration. That time, that theta value there, the time value, I can't stress enough how much stress that relieves when you have time on your side. Now, the way we trade, we do not do any spreads. We don't do any naked positions, nothing that's going to jeopardize your house, right? We don't want you gambling away your house or anything else like that. The way we trade, we buy first, then we sell. We buy calls and puts, and then we sell them in that order. Okay. You can only lose what you put into the trade with the way we trade. There are strategies out there. And this is the thing, if you do not know what you are doing with options, you will lose your money. I need you to understand that. There are a lot of different strategies with options, and it's not something to toy with. If you do not know what you're doing, you really need to not do it. You need to learn what you're doing first, otherwise you will lose your money. I've had interactions with people. I'll never forget one of my early students, if you will, Amber. I know some of you heard the story before. Nice lady, came from the health sciences sector, and I think it was a massage therapist or something, and 5 kids, and she wanted to learn how to trade so she can get a bigger house and be able to feed the kids. I don't know what she's doing now, but she learned our program very well. She's actually very good. I was so happy and proud of her and stuff. And then she came to me and said, "Oh, Hugh, I discovered a new strategy." I said, "Okay, what is it, Amber? What is it?" "Oh my gosh, please tell me." No. She said, "Well, I'm selling naked puts on FFIV." And I pulled up FFIV, which is a tech stock, and I said, "Amber, listen, I want you to stop doing that." "But I'm making money, Hugh. Every month I'm making money." I said to her, "You're making money now. But there's going to be a day when FFIV is going to go down. By selling naked puts," I said to her, "you can make money if FFIV is flat or goes up, right? But one day it's going to go down. And when it goes down, the value of those puts becomes more expensive. And if you don't have the equity to back it up, anyway, complicated." I said to her, "Just know you're going to get a margin call from your broker." "Well, what's that, Hugh?" Well, I said to her, a margin call is where your broker calls you up and says, "Well, you don't have enough equity here to meet your margin, and we need you to put in some money into your trading account, or we liquidate your account. And but I'm making money. I said, "Amber, I forbid you to do that. I forbid you. I see a train coming down the track." Anyway, she didn't listen to me. And then not long after FFIV came down, she called me up and, "Hugh, they want money." I said, "How much?" 45,000. I said, "Well, do you have it? If you don't have it, they liquidate your account and you're done." And that's exactly what happened. And then she was out of the game. So go back to massage therapy, Amber, because that's where you are. Okay. I warned you. If I could jump out of the computer and take your hand off the keyboard, I would have, but I couldn't. And that's what happened. So I'm not sure how I got off on that track, but anyway, that's what that is. All right. Trade number 5, notes are incorrect for a positive gain. Not really sure what you're referring to on that. Number 4, I'm not sure what you're referring to there on that, Jonathan. Legend on project number 2, green has a red error. The green-red has an error for your information. Projected number 2. Green-red has an error. Which one? Let me go back here for a second. Maybe there's something here. They found something here. I'm not sure what you guys are referring to. I had gains on stuff here. I don't know what you guys are referring to on the projected 2 into 10 green. Red has an error. Tom, where are you talking about here? There's the only loss there at October the 26th. October the 26th. Can you guys elaborate? The legend on the graph. Okay, let me go back here. Actually, okay. Yes, you know what? Yes, yes, yes. You guys are right. The green is the actual, the red is the budget. The green is the actual, the red is the budget. Sorry about that. I got these guys reversed. Yes, yes, yes. The red line here is the budget. The green is the actual. Thank you for pointing that out. Okay, okay, okay. All right. Let's get. Okay. My gosh, you guys are good. You guys are good. Okay. I got to give a bell for that. Okay. All right. More. Let's get to that, to some more comments here. I love it. You guys are awesome. Okay, here. More questions here. All right. Yeah, thank you for that, guys. Thank you. Thank you very much for that. All right, Mary, new to the service. How do you start with 2,000 for the challenge? Okay, so first of all, if you are new to the challenge, you don't have to start. You can start. That challenge started on September the 25th. You can pick this up at any point. Do your own spreadsheet. If you're joining us in the trading room, we can provide you with the spreadsheet, and you can change it, alter it to however you want. There are no hidden or protected cells. Punch up or create your own spreadsheet, your own targeted prices, whatever like that, and do your own, right? And then when we say, okay, we're looking to buy. So the way it works is this: we have our. Here, let me go back. I'm just kind of expand this on a little bit here. Okay, so let's take a look at this. So 49.50. This here is what we have budgeted for tomorrow. In other words, I can trade up to 49.50. So what I'll do is if I see the setup, and let's say that particular option I'm interested in, let's say an at the money option costs $3.50, then I will take the 49.50 divided by 350, and I see I can trade 14 contracts, right? I can trade 14 contracts, and my budgeted target is $105. $105 and $105 divided by 14 contracts. I have to have each contract make 7.5 cents, plus another penny for the broker for his commission, 8.5 cents. So if I have 14 contracts at that option price, 8.5 cents will give me net the target on my profit. Anything more than that will give me a greater budget variance that'll push me up the ladder even faster. That's kind of how we do that. But yes, you can start with $2,000. You don't have to come in at 40, 41, or 42 or whatever. Where's this thing? Here we go. You can start this at any time. In fact, we've got a lot of people who are starting midstream, and they're doing very well at it. So maybe you're not going to make your 20, your 10K by Christmas. Maybe you'll make it December the 30th or something. It doesn't really matter. The point is you're going to take your 2,000, at least that's the idea. Take your 2,000, turn it into 3 or 4 or 5 or 10 or whatever you want, right? Kind of works that way. Herb is saying, what duration are your trades? Most of our trades are a few minutes. That's the objective there. We do not want to hold overnight. Once in a while, I may have to hold overnight. But before we do hold overnight, we do assess the situation and determine the likelihood of the stock, if it's worth holding overnight or just cut our losses. So, all right, another question here. Will the trading room continue open for OMG and other trades after the 10K challenge is over? Absolutely. The trading room has been going on for 14 years, folks. So even after we finish the challenge, and by the way, every day we still do the OMG, which is short for out of the morning gate. We still do that trade. As well as scalps and different things. So absolutely, we still continue on, not a problem. All right, you can use a cash. I think you can use IRA cash account in there. Do the daily gains in your 2 to 10K program typically achieve the 6% level? We may not go for a percentage gain on that. So what I do is, like I just mentioned earlier, I may look for how many cents do I need? How do I feel about the market? If I see it's going to be going on a tear to the upside, I'll probably, run it up a few more cents. All right. I don't want to get greedy, but at the same time, I don't want to leave money on the table either. All right. So I kind of want to run with it and make money along the way to take advantage of any major moves if I'm fortunate enough to have that. Okay. I think that's really kind of important. All right. Another question here. Do both you and Aaron train in the trading room at the same time? We are both in the trading room, and yes, we will go over various questions that are posed to us. And when you do have this interactivity with us, Aaron and I are the only ones that see that. Okay, it's not like your questions are out there to the audience. It's not ask the audience, poll the audience. It's not that at all. They're all directed to Aaron and myself. Okay. So question, what about the day trading rule if you have under 25,000? If you're in a cash account, that rule does not apply. Also, if you're outside of the US, that rule doesn't apply either. Okay. So that's pretty important. Use a similar delta for your trades. I like to use a delta of 45 or higher. That's what I like to do for this particular thing here. And so let me just see here. As trading room members, should I be looking to do your OTG, OMG 10K challenge and scalp each day? Okay, so I mean, you could do as a trading room member. Should I be looking to do your OTG? I'm not sure. Out of the morning gate, or the 10K challenge and scalp trade each day. Look at, we teach you how to trade, so we have different strategies, and you can, whatever your preference is. Some people like the out of the morning gate, OMG, because that is based on the 5-minute breakout of support and resistance. In other words, that particular strategy, the OMG, looks at the immediate support and resistance on the 5-minute chart, and we just go back a little ways, and then the first breakout of that support and resistance, that is the direction we're going to go, aiming for 6% gain, and it's been working extremely well. So that's a really cool strategy, the OMG strategy. Now, I also like to use the scalp strategy, which often I use for the 10K, where I go in for bigger dollars and just go for smaller gains, not so much percentage, but by cents. And I do calculate how much room I have to grow into, make sure I do have the room to grow into before I hit a support or resistance level. And I take my gains. Once I hit my profits, I'm done for the day. Okay. And that's the scalp strategy. That works very well as well. All right. Can you talk about the importance of common patterns in price action? How important are they to you? Well, I love patterns. Chart patterns are technical indicators that we use, the chart patterns. My favorites are cup and handle is probably my all-time favorite. I call it my money in the bank strategy. A beautiful cup and handle. And the more the chart patterns form, the better they perform. Okay. So the clearer they are, the better they perform. Now, don't try to look for the pattern. You have to be aware, you have to understand what you're looking for, but don't try to force it. If the pattern does not jump out at you, like here's the pattern, okay, don't try to force it. If you have to force it, it's probably not quite as clear. If it's clear to you, then get into the trade. It's almost, and I never want to use superlatives because there's never any guarantees, as you know, but it's very likely your chart pattern is going to fill. Again, watch your support and resistance levels. Okay, make sure that you have enough room to grow into. I call it my runway. My runway. Any pilots on board? If there's any pilots, you'll know what I'm talking about. So when you go to land your plane, right, you want to make sure not just that you have a runway there, but you want to make sure it's clear. You want to make sure there's no snow removal equipment on the runway, or you want to make sure there's no animals basking, no coyotes basking in the sun, 500 feet down the runway that you're going to run into. You want to make sure you have a clear runway, right? And that's what I call my runway. So you want to make sure you have that room to grow into. And along that same vein, all right, you want to make sure that there's no high impact news to come out in the next little while that's going to thwart that trade. In other words, let's say you have the setup to get into the trade and you want to get into it and you do have the room to grow into, but in that space, time-wise, there's going to be a news item like an unemployment claims report. An unemployment claims report is a pretty high impact report. If the number is going to be, for example, higher than expected, that means that maybe the economy is not as robust as you might think it is, or that they expect, I should say, not what you think, but what they expect, and therefore it is anti-inflationary, so the stock market will probably go up. If the unemployment claims report comes in under the expected number, then that means the economy is still, from a labor standpoint, very vibrant, very robust. It's there's a lot of money still. It's inflationary. The market doesn't like inflation, therefore there's a threat of interest rates, and therefore the market might come down, even though you had the room to go into. So you have to be careful and watch that. All right, these are just examples, but anyway, yes, I love chart patterns. I do look at chart patterns all the time. Okay, Ella, I got to write your name down here. Okay, Ella, are you a member of the trading room? Because if you are, then I can send you the spreadsheet. I'd have to get confirmation of that, so I'll probably send a message to customer service. They'll probably be able to get it out to you sooner rather than later. Watch for that tomorrow morning. Should be there. Okay, I'll check with them on that. Make sure that you get to do that. What expiration do I use? Again, I think I mentioned that. Mondays and Tuesdays, I like to use this Fridays. Wednesday, Thursday, Friday, at least these next Fridays. Since the call is required to buy 100 shares, am I limited to puts or scalps? Okay, you need some education on that here. Okay, Mary. All right, so, all right. Since the calls require you to buy 100, they don't. First of all, a call does not require you to do anything. If you buy an option, all right, to own an option gives you the holder the right to trade the underlying stock for a certain price by a certain date. It allows you, but it does not obligate you. You do not have to buy the stock. It allows you to buy it if you want, but it does not obligate you to. So we are not interested in buying the stock. I don't want to buy the stock. SPY is what, about 420 or 425 a share? My goodness, 100 shares, which equates to one option, costs you $45,000. And you know what? We're going to stay after. Okay, so Mary, why don't you stick around after, okay? Because I'm going to go over kind of what options are and how it relates, okay? So anybody who is new into options or SPY options, stay after, because I'm going to go over what options are and how it all relates. But I think you have a little misguided interpretation of what you are with that. Okay, so this thing about limited to puts. So another thing is this: if you expect the stock to go up, you buy a call option. If you expect the stock to go down, you buy a put option. Call up, put down. You buy first and then you sell. Okay. All right, we'll go over that a little bit here. Bill M, in the past you mentioned a new system you're working on. Is that still in play? Yes, absolutely. Keep an eye for things. Actually, there's a couple things in the works right now, and you will be getting notice of something very soon on that, and watch for it. Ed S, all right, I am new. Where do I learn the strategy? Scalp and out of the morning gate. I'll get that information a little bit here. Does Aaron talk about longer term trades? Aaron's got his indicator. So Aaron uses, I don't want you to get complicated on this. He uses Fibonacci and Andrew's pitchfork with a combination. So he gets into a deeper dive. We call it the 1 + 1 = 3 deep dive analysis. And he gets into that in a big way. All right. All right. Mary H. Okay. I'm surprised you guys don't have this yet. But I will make sure that you guys get this. Okay. Mary and Ella. For sure. All right. Appreciate that. Okay, Herb signed up. All right, let's move on, folks. I want to show you something here. Trading. This is what some of you guys are talking about. The trading career plan. This is what I want to talk to you about. So there's actually a couple of things here that I think are really important. And I had this conversation with somebody the other day and said, well, where do I go? I said, okay, first of all, on our website. Now, this is what happened here. Let me just kind of go over this. On our website, we let me go back here. We are actually hang on, this is not it. Let me take this off here. Let me go back to day trades. So several months ago, I'm not really sure when this happened, but we did recently this thing called the Ultimate Training Course. By the way, you guys okay if we go a little over an hour on this? Okay, you guys okay with that? All right, anyway, we did this thing called the Ultimate Training Course. This is a live session, about a week-long session. What we do is we recorded each session. Each session is about an hour and a half long. And Eagle Financial Publications gave a very special introductory price to this thing. This thing is normally like $3,500. All right, very comprehensive training course that covers everything from soup to nuts. I was going to say cradle to grave, but that's not a good analogy. Soup to nuts. We get to the introduction options, fundamentals, money management, building confidence, the mental aspects to trading. We get into this stuff in a big way. We talk about support, resistance, chart patterns, the Greeks. Remember I mentioned to you before about, well, Hugh, do you know the Greeks? No? Well, you better learn them. Well, that's what we talk about. Only the things that we teach you only what we use ourselves to make money in the market. We're not going to teach you anything and everything out there. This is, if you want to learn about the stock market, it's like going into a university that you're never going to graduate from. But what we do is we teach you what we use ourselves, everything, no stone left unturned. We get into our strategies, scalping, OMG, Aaron's strategy, how to repair trades gone bad. Very important to know this stuff, folks. You can know this, but take a look at this. Now, here's the thing I want to tell you. Eagle, the people over there at IT, they're supposed to take this offer off the website, but I think they forgot it on. I don't even want to say it too loud in case they hear me. This special price is still $9.95. I couldn't believe it. So you're going to get 11 different courses at an amazing discount of $9.95. And by the way, we guarantee at least 6 months out that you're going to get this, but we have yet to knock anybody off. Okay. We have to have an end date. So they say 6 months, but you got it pretty much for life. You know what I'm saying? So get in here, get this. Now there's no cancellations or refunds when you get this special offer, but I don't want to use the word guarantee, but if you do not learn a lot of great stuff from this course, even if you already know a lot of stuff, I don't know, you can't be helped. Okay, I'm going to come right out and say it. This covers everything we do. This course covers everything we do. Okay, $9.95. So here's what to do. Go to the website, DayTradeSPY.com. And again, I don't want to bring this to light to the. I know they're not listening to this. It's Sunday night. They're sitting at home in bed or reading or going out with their families. So go put it to the top where it says Ultimate Training Workshop. Click on Ultimate Training Workshop. You get into this and then click here now to learn more and go on down here and buy this course. Just get this course, fill it in. And let me tell you, this is everything we do is right here. Everything we do right here. Okay. So we're going to move this guy over here. So this Ultimate Training Course, again, intro to options, fundamentals, money management, building confidence, support, resistance, mental aspects, Greeks, scalping strategy, out of the morning gate, Aaron's 1 + 1 = 3, part 1, Fibonacci, repairing trades, Aaron's 1 + 1 = 3, strategy, part 2, pitchfork, and a Q&A session. At least an hour and a half each session. You can go back and forth. You can stop it, rewind, fast forward, pause. The best thing to do here, I'll tell you right now, is to go through it all the first time, then take notes as to where the interesting parts are. So, okay, 20 minutes in, write down 20 minutes. Next one, 24 minutes, write down 24 minutes. Go back then and review it, okay? Take the Ultimate Training Course. Less than $1,000 are going to get you everything we do. Then join the trading room, moderated by yours truly and Aaron's strategy. This is where it all comes alive, where the rubber meets the road every morning, 9:20 to 10:30. Learn and earn from the best, interactive, exciting trading, real-time data. This is the longest running trading room. We've been doing this since 2010. You're going to build confidence, build consistency, and you're going to hopefully build your trading account. And remember, we teach what we trade, and we trade what we teach. This is every morning in the trading room. Then the next steps, learn the strategies, experience the strategies live in our trading room. Please ask the questions in the trading room. Anything you're not sure of, this is where you're going to get your answers. Now, Aaron likes to say paper trade at least 100. I say if you can do 30 of them, if you get good results with 30, then and you're going to log your trades. Once you learn from your trades and you feel good about them, when you're comfortable, then transition to real money, starting small, gradually increasing your investment. Stay with the program, because the longer you're in it, the more exposure you're going to need, more market situations, conditions, and then keep our mentorship close to you, because that's how you're going to become very, very good at what we do. Okay. And I believe that your career path to trading is closer than you think. We had some people here, they're in here for, I don't know, a couple months, and they're doing extremely well. The traders that do the best are the ones that have been with us for years. So the longer you're with us, the better trader you're going to be. Every day is different on the stock market, folks. Every day is different. All right, so let's get back to some more questions here. All right, I've got one up on the board here. We have 3 total accounts, 2 retirement and 1 investment. We're doing our own version of the 2.5 to 10K. We're trading with the same amount on all 3 accounts, using only 2 at a time, 1 investment basket and 1 retirement for the challenge, and then 1 investment basket, the other retirement account. This is getting confusing here. We have 25,300 in the investment account, but have 2 separate, but I've separated into 2 baskets. I'm sure trying to achieve 10,000 for each basket, 1 for living expenses, the other to reinvest for the next challenge. We currently have 5,000 to trade in each basket. We're using the same amount in the retirement accounts to keep it simple. I hope this makes sense. Can you please give us an honest opinion? Okay. Whoever wrote this, you gave me a lot of stuff. I just noticed a few things that jumped out at me. You got 25,303 accounts. The rule of thumb is, first of all, never invest more than you can afford to lose. Okay. I would trade 1 account at a time, because if and when something should go horribly wrong, should go horribly south, you don't want to lose your trade in 2 accounts out of 3. You should only just use 1. I would just stay with one account at a time. Don't be so aggressive. And I'm almost sensing that you're forcing trades. Be very careful about this. Yeah, I would scale back and just focus on 1 trade at a time. I know that when I used to do at the beginning, I was insane. I was crazy. I got so excited about this options thing. Oh my gosh, I'm looking at all these different companies and trading companies all over the place and stuff. And I'd have 10, 15 trades on at once. And I remember there were times when I was in profits on some of these trades, but I completely forgot about them. And then they would expire worthless. What an idiot. What a bonehead. Wait a second. So you're up 50%, but you're too stupid to hit the sell button and take the money, right? Right? What kind of crazy thing is? Instead, you forgot about it, Hugh, and it expired worthless. Well, that's real smart, isn't it? Anyway, I found that if I just focus on 1 trade at a time, and I do very well with it, that's the best. That was the best approach for me. All right, so more questions. Okay. Should I take the ultimate training course if I'm going to be in the trading room, and vice versa? Well, that's an interesting question. So let me put it this way. If you're already familiar with options to some degree, you know what? Jump into the trading room, and then you'll see quickly whether you need the ultimate training course or not. The ultimate training course does cover everything we do. So once you take that, you're going to be well positioned, right? Great foundation to just jump into the trading room. You're going to understand what we're doing. Now, admittedly, sometimes the trading room can sound like, air traffic control over Manhattan, but, but it's, we try not to have it that way. So we try to be very clear on what we're doing. But I would recommend the ultimate training course and the trading room, really for the money. You know how easy it is to lose $1,000. Invest in yourself first, then you can invest in the stock market. Here's another question here. What do you do, Hugh, to make most of your money in trading or training? All right, so let me explain. Okay, so I made the most of my money in trading. I've got a special deal that I help people over at Eagle with the training. Over the years, the many years I've been doing this, I took a lot of my gains and got into real estate. But right now, I don't know if some of you might know this, but early to mid-September, I spent a week in the hospital, got in for gallbladder, but I ended up staying there because of the high blood pressure. So now I made, can you see this? So it's a blood pressure monitor. I check this a couple times a day, and the doctor made me stop trading in real for a while until actually for a good few months. He told me, he said, listen, I don't want you trading. I need you to take your blood pressure down and keep it down. He told me high blood pressure, the silent killer, and all. He's giving me the whole spiel on that. And when they saw my blood pressure was over 228 over 187 or something, they said, how do you feel? I said, I feel fine. I can drive home. So you're not going anywhere. Yeah. 228 over 187 for blood pressure. I should be dead. Anyway, so they did make me promise that at least for a while, I'm not going to do real trades. I hope that answers your question. But when I trade, I do very well. Okay. So I just didn't want to do the market. So I guess what was the analogy he used? That was actually pretty interesting. He said, if you take a frog and throw him in boiling water, he's going to jump out. But if you take a frog and put him in cold water and just turn up the heat, he'll boil, he'll cook. Okay, makes sense. A couple of more questions. We'll get some more questions here. Thank you for these comments here, Herb. I appreciate your time. Hope to sign up soon. Cool. You asked about courses. I took a few and found many confusing, and most tried to upsell you. Not enough clarity to be able to make money. Some courses make it look so simple, but they all look backwards. What do you suggest to look for forward-looking results on the stock market? What do you suggest for forward-looking results on the stock market? If you're looking for indicators, all indicators, all right, all indicators give you backward history. They give you information, historical information. We like to use that historical information for some forward-looking predictiveness in the market. Now, there's nothing that will be 100% that's going to tell you where the stock is going. But using our indicators, our charts, our chart patterns, our fundamentals, all of those things that we use to combine, and the whole historical aspect of what's kind of happened, we have a pretty good idea of where the market's going to go today. Okay. And between Aaron's indicators and my indicators, when we are coordinated with these two sets of indicators, I don't want to say it's a sure bet, but it's probably a pretty sure bet the market's going to be going in that direction. So I think that is I think that's really a pretty cool thing. You'll want to get in on this. I have not seen anything like this, and trust me, I've looked. I've taken so many courses in the past, and we took the best of, we just okay. So let me see if I can put this eloquently here. So we took what we think that you need and what you want, and we basically thought, okay, you may not want to know everything about the stock market. You probably want to know, how do I make money on the stock market? That's probably the real question you want to learn, right? It's like, you go to Home Depot to buy a drill. Well, nobody really wants a drill. What they really want is a hole, right? You want to be able to create a hole in whatever your project is, right? You don't want a drill, you want the hole. And that's what we're seeing. You probably want to know, how do I make money on the stock market consistently, confidently? And that's probably really what you're looking for. All right, let's get to some more questions real quick. And then we're going to, I love your saying, there are old traders and bull traders, but there are no old bull traders. I love that. I love that. All right, one more question. Any special deals on the trading room? I think the deals you'll find on the website, I think, what are they asking? $6.99 or something for 3 months. Folks, that's a steal. That's a steal. Do not hesitate on that. Anyway, I think with that, we're going to, I think that's about it, right? All right, so listen, those of you who are new and want to learn about the options, all right, and why SPY, why now, why us, stick around, and we are going to talk about that right after we sign off on the weekend review aspect of this. All right, so stay with us, and we'll be back after with that. And the sun, be great at what you do, give it all to you, and trust the process and keep your eyes on the prize. I can tell you what I'm seeing, you can have it if you dream it, just be brave and you'll achieve it all, I wanna All right, we're back. We didn't really go anywhere, but we're back here. And what I'm going to do now is, especially for those people who are new to options, let's go right here. If you are new to options, let's just skip ahead a little bit. There you go. All right, so what are options? Okay, so again, in the questions box, if you have any quick questions or comments, put them in there. All right, options are actually contracts, ladies and gentlemen. They give you the right, the options holder the right, but not the obligation to trade the underlying stock for a certain price by a certain day. So when I say to trade, you can buy them or sell them. And many ways that you can actually use these options. You can use different spreads. There's straddles and strangles. You can buy both directions. You can sell both directions. There's calendar spreads. There's covered calls, married puts. There are many different diagonal spreads or different things. Some have bullish tendencies. Others have bearish tendencies. So all you really need to do to know the way we trade is you just have to know two options, okay? Call options and put options. So a call option is what you buy if you expect the stock to rise. If you expect the stock to drop, you buy a put option. Call up, put down. There's also this thing called the strike price. This is the set price at which the stock can be bought or sold if and when the option is expired, okay? Again, this is not meant to be a general, an in-depth instruction on options. This is just a general kind of an overview of what options are and how this works. There's an expiration date. So when you're buying an option, you're essentially buying like an ice cube. The ice cube is going to melt on you. It's going to melt, and it's going to melt at a certain date, at the close of the certain date. Now, with SPY, there are options that expire every day now. I can buy an option that's going to expire Monday, Tuesday, Wednesday. I can expire an option that's going to, a week from now, 2 weeks from now, a month from now, at the end of the month, at the end of the quarter. Lots of expiration dates. This is when the contract expires. Pros and cons. The pros, you get a lot of flexibility with options, cost efficient, huge leverage, high return potential, which is what I like about options, because now you can actually control a lot of underlying stock for not a lot of money. Again, many strategies available, but what I like about it, it's fun, exciting trading. I can honestly tell you that after many years of doing this, I'm still just as excited today as I ever was getting in and trading. Every day I wake up excited in the morning. Where's the market going to go today? Am I going to make some money? Am I going to beat the market? Is the market going to beat me? Who's going to win in this game? Okay. It's a game. It's a game, and the way to keep score is with the money that you make, right? There are some cons to this. You get your time decay. It's what we call theta. That's one of the Greeks. You can have some theta loss in here. And now I should tell you that your theta loss, it's not linear. It's actually exponential. Okay, so in other words, the closer you are to expiration, the faster your option is going to expire, especially the same day. If you're holding an option at, say, 2 or 3 o'clock, same day expiration, that option is going to expire very quickly. You don't want to be in a trade, okay? You're going to see it vanish before your very eyes. Commissions, of course, is a comment that I hear about options. There's some platforms that charge a lot on commissions. I like to use Tasty Trade because they cap their commissions at $10. So it's $1 to open a $1 contract to open a position, 0 to close, and up to a maximum of $10. So if you're doing 10 contracts, it costs you $10 in commissions, plus a couple cents in exchange fees. Okay. But if you're doing 100 or 200 or 500 contracts, your commission is $10. Can't beat that. And let's face it, there is risk with options. There is risk. Okay. You have to have a pretty good idea where the market is going to go to make some money on options. This lovely young lady here, why we trade options? That's all we do. Day trade them, period. That's all we do. SPY. Highest traded stock out there. It's affordable, liquid. I can throw $100,000 in a single trade and I will get filled in seconds. That's that liquidity. It's very important. You don't want to buy something that's like a roach motel. You can get in, but you can't get out. Exciting trading. The profit potential is huge. Once I started trading options, I never looked at anything else. That was it. No more stocks for me, folks. No more stocks. We trade one stock, basically one strategy, 1 hour a day. When I say one strategy, we've got actually a couple strategies in there. All right. That one strategy refers to basically our bread and butter strategy, which is just it is the basis for our OMG, the basis for our scalping, the basis for everything. Okay. But the thing is here, the important thing is that over the years, over those many years I've been doing this, kind of figured out what works and what doesn't work in both trading and training. And I think this is really important. So you want somebody who understands both the market and how to convey the message to you, right? You want somebody who's a coach, a mentor, who's empathetic, understands your needs, works with you on your trades, right? Helps you along the way. We know how to do this, right? We already know how to do this. You need somebody to help you, do this. Now, once you know how to do this, you don't need us, I suppose. But it's to have a coach in your back pocket. Let's put it this way: sure wish I had a Hugh and Aaron to help me when I learned this stuff. I'd have been a lot further ahead, a lot quicker. So, moving along here. SPY, why now? Why SPY? Why now? Well, follows the top 500 U.S. stocks. Efficient use of analysis time. This is really important. It used to be a long time ago when I'd be looking at different stocks. I'd have to look at the stocks, the sectors, this, that, the other thing. And we'd be looking at stocks and we'd be getting together with our groups Sunday nights, Monday to Friday, 9 to 4. We'd be getting together on Tuesday nights, Thursday nights, Friday nights. We were consumed about the stock market and analyzing things. Didn't even know what we're analyzing. But with SPY, we're only looking at the top 500 stocks. We're looking at basically where the economy is going. That's where SPY is going to go. So, long and short of it, I get up in the morning between 8 and 8:30, check my computer, and I can tell you very quickly where the stock is going to go today. That's an efficient use of analysis time. The moves are quick. You can earn your daily goals, your daily gains fast. Usually win these trades in a few minutes, in and out. Market's fairly reliable, fairly consistent, fairly predictive. Again, and also fairly forgiving. But I want to make sure you understand the disclaimer. There's nothing foolproof in any of this. No guarantees except one guarantee. That is that you will lose your money if you do not know what you're doing with options. That is for sure. And the nice thing here, price can be anticipated in any market. It can go up or down. You can make money with SPY whether the market is going up or down. That's pretty cool. You see, if you were to put your money in, say, a mutual fund, they only make money in the markets going up, right? That's why you get all this rebalancing. So when there's been a move to the upside, you'll often see, especially at the end of the year, when your institutional investors are moving their money around to more, greater opportunities elsewhere. They have to find where's the opportunity. I think it's going to be in AI, artificial intelligence. So you'll see a lot of money moving into AI stocks. If let's say Apple made a big move in the fourth quarter, well, that move has probably been made. So they'll probably take their profits at the end of the year off Apple and move it to somewhere else, right? But with SPY, if you think the market's going to go down, you simply buy put options, right? And again, note the disclaimer on this. All right, so why SPY? Why not? Learn something new, stay mentally sharp. That's what I like about it. I laugh. Every now and then I run into somebody, they discover I'm 68 years old. They say, "Oh, you're pretty sharp." So what do you mean I'm sharp? What do you mean? What's that supposed to mean? Well, most old people aren't that sharp. So what do you mean old people? Who are you calling old? I look, this is the young kids, right? And I guess I guess older people aren't sharp. But I find that when you're trading options, you're studying this stuff, you're using your brain, you're staying mentally astute. I think that's really important. Even if you don't want to trade, this is a really good exercise, right? It's like playing chess. Earn while you learn. Look, time's going to go past anyway, so you might as well make some money along the way, folks. Again, make money along the way. Huge profit potential for serious traders. You ever put your money into a fund and you're just kind of waiting, and every day you check it every day. Oh, it goes up and it goes down. It goes, kind of drifts along, and maybe over the years you make a few dollars. With SPY, you can make a little bit of money every day, and it just grows and grows very nicely. you can actually achieve a dream lifestyle. I know I have. Exciting, thrilling it's a thrill to beat the market. It's actually a thrill. And you can pass this knowledge on to your kids. Financial security. I can't think of a more liberating feeling, more comfortable feeling than knowing that my kids know how to trade. They may not choose to trade, but they know what to do to make some money on the markets if they so choose. Because folks, both you and I know there's no job security anymore. You could be with the company for 30 years and they find somebody who can do it better, cheaper, right? They give you the golden handshake, give you 2 weeks notice, 3 weeks, whatever, you're gone. You know, that's the way it is right now, right? That's the situation these days, right? You don't even know if the company's going to stick around. They're going to sell, buy, what are those those famous lines? There'll be no changes after the merger. That's right up there with your check is in the mail and I'll respect you in the morning. Come on. If you can teach your kids how to trade, you'll feel pretty darn good knowing that they have the ability to go back in your backyard and shake the money tree. Folks, here's the difference between stocks and options. Okay, I'll get to some of your questions after. Now, these numbers are a little dated because I think we're sitting around 420 or something. But let's say an option, let's say the stock costs $404. You want to control 100 underlying shares. It's going to cost you $40,400. But one contract might cost you $3, which will be $300. Now, for the sake of this exercise, we're not going to include commission, okay? Right? So let's say the stock goes up $1. Well, now you have $40,500. There's this thing called the delta on an option. So if the delta is 50, which is usually what it is with the options that we buy, that means that if the stock goes up $1 and a 50 delta, that means the option goes up 50 cents. Now, you might feel you're getting a little ripped off, but you're really not, because take a look at this. That option you bought for $300 is now worth $350, right? $350. Take a look at your return on investment. Which would you rather have? 0.25% or a whopping 17%? This can happen in a few minutes. This is not pie in the sky or something that happens once in a blue moon. This happens all the time. This happens all the time. Folks, after discovering the power of options, I've never traded stocks again. Okay? This is why options are really important. And I just want to tell you here, one stock, one strategy, 1 hour a day. This is where your benefit really comes in, folks. You can learn from our mistakes because you're frankly not going to live long enough to make them all yourself. And that is what's really important. Okay. All right, let me just take a look at some of the questions in here. On the pick of the day. Okay, Bill, on the pick of the day, should I use 24 contracts on the sell or split it to 2 sells at 12 each for faster selling? I don't know why you're using 24 contracts. You can use what you want. The pick of the day, I mean, I would I just kind of use the standard 10 contracts when I use mine, but you can do whatever you want. The pick of the day is a service that we have. Okay, so I know there's a lot of new subscribers to the pick of the day. For those of you on the pick of the day, welcome. So what you're going to get is every morning, just after 9 o'clock, maybe 9:10, 9:15, somewhere in there, an actual contract that is going to, an email that on the top part, it's going to give you the actual option we are interested. It's going to give you the option code. All right, it's going to be period SPY, the expiration date 23/11/10, and then a P for put, C for call, and the strike price, maybe 426 or whatever it'll be. Okay, that is the option we are looking to trade at market open. So then when the opening bell comes at 9:30, ding, 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 you're going to want to get in on that option. But wait a few seconds until the bid-ask spread settle in nice and tight within a 2, 3, 4 cent spread. Okay, not any more than 3, 4 cents. And then you're going to want to buy it, assuming the stock is going your direction. So if it's a call, Take a look at your 1 minute chart. If you're seeing green candles, buy it then. Buy limit orders, sell limit orders. Don't buy market orders or sell market orders. Market orders are negotiated contracts. That means you may end up paying more for it when you buy it or getting less for it than when you sell it than what it's really worth. Always use a limit order. If the market is going really in your direction, what I like to do is even go 1 or 2 cents higher than the ask. Because if it's going your direction, then you're sure to get it. Okay. So a limit order says this, that you're not willing to spend more than that limit is, but give me the market price or that limit, whichever is better for me. So let's say you're looking at buying it for $3.24. You might actually get it for $3.21 or $3.22. Okay. So immediately when you get, now if it's going against you, let's say the option is a call, but the market opens and then you're seeing a red candle coming in, wait until that red candle turns to the green. Okay, when you start seeing the pressure back to the upside, then get in. Then get in. You don't have to wait for the candle to become green and print as a green, but as soon as you see it start reversing in your direction, then get in. Now, immediately, like to put it up for sale for a 6% profit target, good till canceled order. And then just, walk away, let the market work its magic. Now, it may vacillate up and down a little bit. It may go down before it comes back up, but generally you've got plenty of time. And sometimes it might even be an hour later, maybe in a couple hours, maybe a little longer. Every now and then it might even go into the next day before it fills. But the pick of the day has been working extremely well. Very, very good results on that. So, all right. Good faith violation. Can these occur with option trades? A good faith violation you are going to get when you go over your limit. Let's say you are in a cash account and you have $10,000 you're trading. You can only have $10,000 you can trade, but you're now into a trade for $11,000. They're going to give you a good faith violation. I believe you can get three of these in a 12-month rolling period. You get a fourth one. I'm pretty sure that's the numbers. They're going to suspend you for 3 months. They're going to put you in the corner and say, "Yeah, you're going to cool your heels, buddy. You're going against the rules, right?" You may want to check with your broker as to their good faith violation policy. It might be a little bit different. I'm not really sure. This is what Tasty Trade is. I believe it's 3. You're allowed 3 in a 12-month rolling period. Don't get the fourth because they are going to suspend your trading for 3 months. If you do get the suspension, it's not the end of the world. What you can do is simply open another account, even with the same broker, transfer your money from your suspended account into your other account, continue with trading like nothing's happened. Bill, you'll be 70 in a few weeks. Nice to see that. I like talking to some of these guys because it's really pretty cool. And how I find that some of the older people that we deal with they have a little something. When I say they, boy, I guess we have experience. We know how to be patient. We can sit back. We're a little more disciplined. They did studies on all this, and hey, I'm just rambling. I know it's 9:34, but they did studies that the best traders actually are the women with no male influence. The worst traders are the young males. The young males, all right, they're just too crazy and they don't last long. Okay, so all right, Bill, I had a great Tuesday through Friday. 4 trades. Thank you very much. Jim, I'm a new subscriber. How do I get the pick of the day? And if so, for how long? Jim, okay, so I believe on our website, DayTradeSPY.com, you can also subscribe to the pick of the day. Let me see if I can pull that up. Let me see where the subscribe us, or you can always email customer service at DayTradeSPY, but you could also go right up in here, DayTradeSPY.com, under subscribe now, go down to pick of the day, click on that, and scroll all the way to the end. Oh my gosh, they got a long spiel here. Okay, yes. Go down. I think they might even have a special on this now. I'm not really sure. Wow, a lot of stuff here. A lot of stuff. You want to read this, go over it, or just go right down to the end and place my order. What is it? Oh my gosh, yes. Red hot offer. Whoa, this is a red hot offer. $3.99 for 3 months. I think we're at the limit, but you know what? If place your order. Jim, place your order, and if you can get it, great. And I'm pretty confident that you'll get it. Okay. So go down there, grab it, $3.99 for 3 months. You're talking, what's this? $100 a month. Are you kidding me? What's that? About $5 a trade? Please. Please. What a steal. With that, going to wrap it up. Remember, ladies and gentlemen, if you want what I have, you got to do what I do. And thanks for joining us. We'll see you hopefully